you don't have to pay tax. And we're going to explain how and why. There's a concept that I call net zero. Brought this up in a mastermind I'm a part of, and there's a lot of intrigue, so I think there'll be value to share it here. Net zero. So when we think about tax, there are rules for individuals and there are rules for businesses. Now, as an individual, you're taxed based on whatever the top line income is. But as a business, businesses are taxed on their net earnings, not their top line revenue. Businesses aren't taxed on how much money they make, but they're taxed on their net earnings. And so if we get these net earnings down to zero or even negative, then the question becomes tax what? So how does this work practically? There is an order of operations in accounting. An order of operations in accounting for businesses that does not exist for individuals. So I'm sure we're accustomed to math order of operations, right? PEMDAS, PEMDAS, right? Parentheses, exponents, multiplication, division, addition, subtraction. In order to the madness, in order to the chaos. Well, businesses have their own version of PEMDAS, and it's called EBIT or EBITDA. And that is EBITDA. So EBITDA, what does this stand for? EBITDA. Earnings before interest, tax, depreciation, and excuse my spelling, amortization. We follow this order of operations for businesses to subtract all business expenses and business related activity from the top line revenue before we get to our taxable number. So let's have a fun example. $100 million, right? We made 100 mil. God bless. Congratulations. All of that. 100 mil. And that's our top line revenue. Now, we're going to subtract from this, say we pay ourselves, our team, 10 mil in salaries and wages. Cool. Now, say we spent 20 mil on cost of goods sold. And then say, because we made 100 million, so we went hard on the marketing. We spent $50 million on marketing. And now, let's say, and this is just an example, but let's say because we have a private jet, we bought a private jet, and that's how we travel for all of our business meetings. So let's say it's 35 mil for travel. And then just another extra piece for fun, say for real estate and land, say we buy a new location or office building or a place where we want to do business upcoming, but we want to develop it a bit more. So let's say we purchase this land and real estate for 5 mil. Cool. So if we do quick math on this, quick maths, right? 40, 90, 100, 120. So this is 120 mil of expenses. And we made 100 mil of top line revenue. Like, obviously, we have money, right? We made 100 mil. But once we deduct the expenses, we're negative 20 mil in net earnings. Now, net earnings is what is quote unquote taxable. So this negative 20, it's negative 20 mil. This is what is taxable. Because the number's negative, tax what? Right? So taking advantage of this, right? It's like, seems somewhat simple, but what is the ethical aspect of this game? And tell a story. So I called the IRS one time, sat on hold for an hour at least, and then I finally get through and I asked the people, there's irs.gov for individuals. Where's the irs.gov website for businesses? Where are all the rules? And they tell me that they don't publish the rules to the business irs.gov. That doesn't exist because it'd be too easy for people to take advantage of the game. So, God bless, we're sharing this information here and now. And a really funny story, a metaphor actually. If we've seen the episode The Office, there's this episode in The Office where Michael has a surplus. And I forget if the episode it's called like The Chair or The Surplus, but essentially Michael has to spend this money. And if he doesn't spend the money, then he's just going to lose it in some uninteresting way. And so if we equate this to the business, right? If we make 100 mil and our expenses are 30 mil and we're 70 mil in net profit, why would we let 70 mil get taxed when we can use the revenue of the business to reinvest back into the business? Right? So business tax cycles are based on the previous cycle or the previous year. So we'll have Q1, Q2, Q3, and Q4. And Q4, timing is a bit important for this. Q4 is end of December. It's when Q4 ends. So by the end of December, we need to have zero or some negative number in the business bank account. Now, in order to accomplish this, we can put the money in a lot of different places. We can write a loan to ourselves as the owner in the business. We can pay ourselves salaries and wages. Then when January rolls around, we can do a couple things. We can leverage credit to pay for any expenses before cash comes in. We can deposit money that we've paid ourselves, the owner, back into the business. There's multiple ways to do it. These aren't the only ones, but some examples. And so we net zero, and there isn't really a whole lot that anyone can say when your net is negative, right? What are we going to tax? Now, what is the ethics behind this? Tax is a game to incentivize private social well being. I'm gonna write that. So, tax is a game to incentivize private social well being. What does this mean? We give money to the government so that the government can redistribute this wealth and create a better environment for society. The whole point of private companies and private industries is for private citizens to create entities that amalgamate inputs, optimize them, produce an output greater than the sum of the inputs for the benefit of the collective society. So the government says if you are using your money to create social well being through your private entity, then you don't have to give it to us. The government says we don't have to take your money and redistribute it if you're already using the money to create well being in society. Makes sense. So, as a business owner, if you provide jobs, energy, food, the list goes on. There are a litany of deductions and advantages that you have as a business owner where you won't be subject to tax. Now, incentivizing private social well being. We can take all of the revenue from the business and invest it back into the business. If we're optimizing and getting to net zero, that's what we're doing. So, the machine of the business, we talked about this in the last video, is something that has the potential for maximum returns over other asset classes. So the business is a machine where you can input 1 and output 10. And then we can input 10 and output 100 and so on. So when we get to higher levels of this, it makes sense that the entity that produces good for society's well-being would have this surplus that they would then use to create more good in society rather than put the money out in some uninteresting way or give it to the government. If you had an extra 70 mil, would you give it to the government to do as they please? Or would you use that money to invest back into this machine, this entity? Right. So we net zero, very important. We use EBIT order of operations and business accounting to do this. And we invest all of the revenue of the business back into the business because tax is a game to incentivize private social well-being. You don't have to pay tax. Your entity, your business doesn't have to pay tax when you understand this. This concept of net zero. Net zero. Now, I'm Jay. This is different. And I do it for the love. You can like, subscribe, all that. I think the best thing that you could do is share this video. This knowledge, apparently, the government isn't giving out. And so paying this forward to whatever other business owner, entrepreneur, founder that you know is just spreading the good information, helping somebody else on their path. So I encourage you, there's one call to action that we can actualize. It's share this video, share this knowledge, and spread it amongst other founders, entrepreneurs, business owners, etc. Now, I have links in the description if you want to see more about Different, my company, links in the description. If you want to check out my community, we have entrepreneurship courses that got taught at Stanford. I teach quantum and chaos. Link in the description for the community. And everything that I provide is to be of good use, an asset. We can spend a lot of time on social media scrolling or just mindlessly wasting time watching content. But I really make it my intention and priority that if you spend the time investing in whatever I decide to put on the screen and share with you, that it was well worth the time and the investment, and it only serves to elevate your energy. Now, again, you can check out links in the description, like, subscribe, share the video. God bless. God bless. I'm going to continue to share the insights, the knowledge, the information, and I appreciate you for being part of the journey. Peace.